Hey, what's going on? It's Nick here from Ways of Wealth, week 38 of the market recap. I hope you all are having a great day. For those of you returning subscribers, welcome back. I appreciate your support. For those of you that are brand new, I'll give you a quick snippet of what I'm all about. I like to highlight key events that happened in the market over the past week. So I'd like to ask you a huge favor. If you get some value out of this video, if you've learned something new, hit that like button. It definitely helps my channel grow. And if you haven't already, hit that subscribe button, turn that notification bell on. We do this every single week. It was a topsy-turvy ride in the market, up and down, a little bit of a pullback. There was some selling that's going to happen. Not sure where we head from here, but what I'd like to do is I'd like to further on a video I had a couple weeks ago, and I'll throw that up here. Inflation is coming. I touched on a topic called stagflation, and I want to share with you what that is all about. With the recent news brought to us by the head of the Fed, Jerome Powell, stating that they would let inflation run a little bit hot for the goal of maximum employment. So what that means is the normal 2% inflation rate will be put on hold. That's kind of where they target inflation to be year over year. They're gonna kind of take that expectation off the table in hopes that there is more investment and obviously more employment. Like I mentioned before, we touched on this a couple weeks back in the video titled Inflation is Coming. But what this means very briefly is that our purchasing power decreases year over year. So let's throw up a chart and you can see the change in a price of a coffee in 10-year spans dating back for 5 decades or so. If you continue to make the same wage over the years, you will be essentially able to afford less and less. So hopefully now we have a better understanding of what inflation is. And the fear is moving forward that the economy moves into a period of stagflation. Now, what does that mean? The first portion of the word stag is basically for stagnant. The economy is in a stagnant movement. It's not moving forward. And the last portion, inflation, is basically to resemble rising prices, or as we learned before, inflation. This has happened before. It happened back in the 70s. There's a few theories as to why this happened, but here are the blatant facts. There was 5 consecutive quarters of negative GDP growth, followed by a 9% unemployment rate, and that was in 1975. One of the main theories behind this is the oil crisis that happened in the early 70s. So the OPEC issued an embargo against the Western civilizations, saying that they would not send any oil. This caused oil demand to surge, and in turn, prices followed. When you truly think about it, you realize how oil directly impacts most goods, whether in production or transportation. This increase in the price of oil was reflected into the price of goods, causing 2 things. Inflation, because the price went up in oil, and the second, unemployment, because companies could no longer afford to employ people. One of the effects of this event was that we saw the overnight rate, which is the rate that the Federal Reserve sets for banks, which is currently at 0.25, skyrocket to 20% in 1980. Now, it's a little bit naive to think that this is going to happen overnight, but back when the Fed raised the interest rates only a couple years ago, we saw what that happened in the pullback in the market. So here's a few things that I'm watching to see if we are on the path to stagflation. The first one, it's out there, it's in the open. The Federal Reserve saying that they're gonna let inflation run a little bit hot. My target, 3 or 4%, but that could slip and they could lose control of that, and we could see levels that we saw in the 80s. So that is definitely something that I'm watching. Another one that was involved in the 70s is oil. Oil today is still involved in everything that is produced. Hopefully that changes in the future, but the fact of the matter is that it is not today. And obviously we've seen a lot of producers cut back their supply. They're not producing as much barrels because the demand isn't out there. There's no cruise ships, there's no planes that are flying around. Now, there is talks of a second wave, and if we do go into a lockdown, another fear there is bankruptcy. And the bankruptcy concern is that when the economy does recover, and it will, we will need that oil demand. So if those producers aren't there, if they aren't up and running, then that could potentially cause a demand shock or a supply shock, whatever way that you look at it. And we could run into this same kind of situation that we were back in the 70s. Another thing that I'm looking at is that the stock market is so overpriced right now, and these companies are trading at levels so far in advance at like 2022 revenue, 2023 revenue, profit, EBITDA, whatever you want to call it, that if we do run into a little bit of a stagnant period in the next 1 to 2 years, these companies will look at raising their prices in order to meet the analyst expectations. So kind of a self-generated inflation. Those are the three key things that I'm looking at to see if we move into this period. I hope that we don't. And that is all this week for the market recap. I hope I've done a good enough job of explaining what stagflation is. If you liked the video, if you got some value out of it, please give me a thumbs up. It will definitely help my channel out. And don't forget, if you've made it this far, hit the subscribe button, turn that notification bell on. We do this every single week. I hope you have a great week on the markets. Happy trading.